Welcome back to Explain the Charts, your premier destination where we meticulously break down complex market movements into actionable and digestible insights for our dedicated viewers. Today, August 4th, 2025, our analytical spotlight is firmly fixed on Litecoin, more commonly known as Litecoin, as we embark on an exceptionally in-depth analysis combining the very latest and most impactful news with detailed, multi-timeframe chart patterns. First, let's cast our gaze upon the daily chart for Litecoin, providing a comprehensive, panoramic year-long view of its price action, meticulously spanning from early 2024 right up to the present day, illustrating its broader market narrative and overall direction. The overarching narrative that has undeniably dominated and profoundly shaped Litecoin's price trajectory over this period is the intense and ongoing speculation surrounding a potential spot Litecoin exchange-traded fund, or ETF, within the highly influential U.S. market. Recent, highly significant reports confirm that financial entity Canary Capital is vigorously pursuing this groundbreaking initiative, having diligently filed all necessary regulatory forms with the U.S. Securities and Exchange Commission, with Nasdaq even submitting a critical 19B for form on their behalf, signaling serious and tangible regulatory progress that could redefine Litecoin's future valuation. This continuous regulatory advancement and the tantalizing prospect of an ETF approval represent a truly monumental bullish catalyst, as it promises to open the floodgates for wider mainstream investor access and attract substantial, unprecedented institutional capital directly into the Litecoin ecosystem, significantly bolstering its market legitimacy and long-term viability. Observing this comprehensive daily chart, we can clearly identify distinct periods of robust upward momentum, particularly evident in the latter half of 2024 and extending into early 2025, which consistently and strongly correlate with positive developments and growing investor optimism surrounding these persistent ETF filings, showcasing a clear market reaction to fundamental news. This consistency in market reaction is a strong indicator for future price behavior around similar news events. Despite encountering some past regulatory hurdles, such as an earlier SEC delay noted in February 2025 that caused a temporary but contained dip, Litecoin has consistently demonstrated remarkable market resilience, often absorbing negative news relatively quickly and recovering swiftly, which is a powerful testament to its underlying fundamental strength and sustained investor interest. This broad, long-term perspective is absolutely crucial as it helps us not only understand the prevailing and underlying market sentiment, which remains largely optimistic, but also the deeper structural forces and key fundamental drivers that ultimately underpin many of the shorter-term price fluctuations and reactive movements we've consistently witnessed. Overall, the daily chart paints a compelling picture of a cryptocurrency that is fundamentally bullish in the long run, albeit with healthy and necessary corrections along the way. Let's now narrow our analytical focus on the daily chart to a pivotal and highly informative period, specifically spanning from mid-2024 through early 2025, allowing us to meticulously dissect specific price trends, identify significant market reversals, and clearly establish crucial key price zones. Highlighting the precise range from June 1, 2024 to March 31, 2025, we first observe a dramatic and acutely sharp decline in early July 2024, where LTC plummeted with force from the mid-$70s to a distressing low of $56.76, marking a period of intense and widespread selling pressure. This sharp bearish reversal, which was notably accompanied by a significant surge in selling volume, clearly indicated either widespread capitulation among holders or a major, systemic market-wide correction, ultimately presenting a profound key turning point for the asset's trajectory, attracting new buyers. However, following this period of intense and aggressive selling pressure, Litecoin staged an impressive and fundamentally resilient bullish reversal, initiating a steady and determined ascent that progressively gained significant traction throughout August and September of 2024, establishing a solid new foundation for growth. The upward momentum truly accelerated and became explosive in the latter part of 2024, specifically during November and December, with LTC's price experiencing a parabolic surge from the $70 to $80 range to impressively touch a significant peak near $140, unmistakably showcasing overwhelming buyer conviction and strong demand. This aggressive and high-volume rally perfectly aligns with concurrent news reports of rapidly increasing institutional interest and confirmed whale accumulation strategies amidst the escalating and pervasive ETF buzz, strongly suggesting that smart money was indeed flowing deliberately and strategically into Litecoin at key inflection points. The $140 level proved to be a formidable psychological and technical resistance point, consistently and forcefully rejecting price action in both early December 2024 and again in mid-February 2025, leading to notable and predictable pullbacks, forming a strong overhead ceiling that bulls have yet to definitively overcome. Conversely, the price zone meticulously established between $85 and $90 has repeatedly proven its mettle as an exceptionally robust and reliable support level, consistently providing multiple strong bounce opportunities for discerning bulls, with the most recent significant rebound occurring precisely in March 2025, underscoring its importance. This price zone is a battlefield between buyers and sellers, crucial for determining the next major swing. These repeated rejections from well-defined resistance and strong, confirmed bounces from established support clearly define crucial horizontal price levels that are absolutely essential for constructing any sound long-term strategic investment or tactical trading plan, informing entry and exit points. Understanding the interplay of price and volume during these historical turning points provides valuable clues for future price action and potential reversals. Moving our analytical attention to the 1-hour chart, we can now gain a much more granular and immediate perspective on Litecoin's very recent price behavior, specifically covering the period from mid-July 2025 to the current moment, allowing for detailed observation of short-term trends and volatility. This hourly timeframe clearly reveals that LTC has been largely consolidating within a relatively well-defined and stable trading range after its prior significant upward rallies, suggesting a period of reevaluation and accumulation by market participants rather than a strong directional move. We can pinpoint a crucial short-term resistance area around $95 to $97 in mid-July, which, following some initial resistance, was eventually decisively breached by sustained bullish momentum, subsequently transforming this former resistance level into a potential new support zone, a classic technical development signaling strength. Crucially, the current price action prominently shows Litecoin robustly holding around the $110 level, with recent news confirming it experienced a sharp bounce off key support near $108 earlier today, August 4th, indicating immediate and strong demand at this very price point, preventing further significant declines. This immediate and forceful bounce on what is now considered a critical short-term support suggests that buyers are actively and effectively defending this specific price level, thereby indicating underlying fundamental strength and a clear reluctance for the price to fall further below it, potentially attracting more buyers. Despite the inherently shorter time horizon and the presence of minor intraday fluctuations, the consistent sequence of higher lows observed on this hourly chart continues to subtly but persistently suggest a gradual upward grind, reinforcing the prevailing and healthy bullish sentiment among attentive traders in this time frame. These consistent higher lows create a bullish structure that traders can rely on for trend following. Traders should pay very close attention to the consistent trading volume observed during these consolidation periods, which, while not always indicative of explosive price moves, does strongly signal sustained market interest and healthy price discovery within the current range, preventing sharp drops and maintaining integrity. This persistent and consistent trading volume around current levels often suggests that larger, sophisticated market participants might be discreetly accumulating positions, or that market participants are generally content at these valuations, effectively setting the stage for future decisive directional moves when fresh catalysts inevitably emerge. The hourly chart is ideal for identifying intraday trading opportunities or managing positions with tighter stop losses, offering frequent signals for active traders to respond to current market conditions with precision. Look for hourly candle closes above or below established ranges to confirm potential shifts in short-term bias. Now, let's drill down even further to the 15-minute chart to meticulously analyze the immediate, ultra-short-term intraday dynamics, specifically focusing on the most recent trading activity from July 29, 2025, to August 2, 2025, providing an invaluable microscope view of recent trades and micro-price behavior. This highly granular timeframe vividly illustrates the ongoing price consolidation phase, where LTCUSD is predominantly oscillating within a very narrow and constrained band, primarily situated between $108 and $111, indicating a current state of compressed volatility and market equilibrium. The individual candles within this constrained range reveal relatively tight trading patterns with small bodies and often long wicks, suggesting a prevailing phase of equilibrium, indecision, and potential sideways accumulation between active buyers and sellers in the immediate term. Volume during this very recent period has remained notably stable and somewhat subdued, crucially lacking the significant, confirming spikes that would typically accompany a major directional breakout, thus indicating a temporary pause in strong market conviction or a period of stealth accumulation by larger entities. For highly active short-term traders and disciplined scalpers, this tight range presents classic opportunities to play the bounces off the lower boundary and rejections from the upper boundary, utilizing quick entries and exits for small, consistent profits. However, it is absolutely imperative to acknowledge that such extended and compressed consolidation phases are often direct precursors to swift and powerful breakouts or breakdowns, thereby making stringent risk management protocols and tight stop losses paramount for protecting trading capital from sudden and aggressive shifts. A decisive close above the $111 resistance level on significantly elevated volume would serve as a powerful and unequivocally confirmed signal for a continuation of the upward trajectory, potentially targeting higher, uncharted resistance zones beyond the immediate range. Conversely, a breakdown below the $108 support level, also confirmed by a notable surge in corresponding selling volume, would quickly invite a rapid retest of the $105 area, and potentially even the crucial psychological $100 level if downward momentum persists and accelerates with conviction, requiring quick defensive action. Therefore, vigilant and continuous observation of real-time volume accompanying any attempted break of these immediate boundaries is absolutely crucial for accurately validating the strength of the move and diligently avoiding costly false signals that often trap unwary and impatient traders, leading to unnecessary losses. Consider using momentum indicators like RSI or MCD on this timeframe to identify potential short-term divergence or convergence signals, adding another layer of confirmation to price action and candlestick patterns. These indicators can provide early warnings of trend exhaustion or reversal. To comprehensively summarize our in-depth technical and fundamental analysis of LTCUSD, both compelling short-term tactical opportunities and significant long-term strategic potential are unmistakably evident in the current market landscape, painting a nuanced picture for market participants. On the decidedly bullish front, the persistent progress and advancing applications for a dedicated Litecoin ETF remain the single most impactful long-term driver, possessing the unparalleled potential to unleash a truly substantial wave of institutional and broad retail capital into the asset, fundamentally altering its market capitalization and perception. Further fueling this optimistic sentiment and hinting at future explosive moves are recent, attention-grabbing comments from the Litecoin founder himself, hinting provocatively that the entire crypto market could be getting ***king crazy in the near future, which resonates strongly with long-term holders and advocates. If positive and definitive news regarding a concrete ETF approval materializes in the coming months, LTC has a moderate to high probability, estimated at a compelling 65 to 70%, of not only retesting, but decisively breaking through the crucial $140 resistance level in the medium term, potentially setting new all-time highs for this dataset and beyond. Should this powerful upward momentum translate into sustained and widespread buying pressure, reaching the previously analysts' predicted target of $160 then becomes a reasonable likelihood, estimated at 50 to 60%. Provided LTC can convincingly establish itself above and flip the $140 resistance into a solid new support base, confirming a strong uptrend. This sustained upward movement would ideally be accompanied by consistently increasing buying volume, validating the strength of the rally and indicating broad market participation rather than just a few large players. Conversely, the potential for a significant bearish scenario for Litecoin largely hinges on two primary and interconnected factors, encountering further, unexpected, unfavorable regulatory decisions, or a broad, systemic downturn across the wider cryptocurrency market that pulls all assets lower, irrespective of individual fundamentals. A decisive and sustained break below the psychological $100 support level, particularly if unequivocally accompanied by high selling volume, would confirm a pronounced bearish short-term trend, making a rapid retest of the strong $85 to $90 demand zone highly probable, with an estimated 75 to 80% likelihood in such an adverse scenario, requiring a full reevaluation of long positions and potentially initiating short trades. Therefore, important price levels for all astute traders and long-term investors to meticulously monitor are immediate dynamic support at $108, the critical psychological support at $100, and the robust long-term historical support around $85, which has acted as a proven floor multiple times. On the upside, keep a close watch on the immediate overhead resistance between $115 to $120, followed by the historically significant $130 level as a major hurdle, and finally, the peak of $140 in this dataset as the ultimate breakout target that could lead to new all-time highs for the asset and potentially a new bull cycle. The single most impactful fundamental factor going forward will undoubtedly be any concrete announcements or definitive decisions from the US SEC pertaining to the Litecoin ETF. This event carries immense weight and could dictate the very next major market move for LTC, so staying updated on regulatory news is paramount. Additionally, closely observing Bitcoin's price action and the overall broader crypto market sentiment is always critically important, as major cryptocurrencies frequently exhibit strong correlations and tend to move in tandem, influencing LTC's direction and overall market health. Always seek strong and undeniable volume validation for any significant price moves, whether upward or downward. High volume accompanying breakouts or breakdowns is absolutely essential for confirming the true strength and long-term sustainability of the new trend, differentiating it from mere market noise or short-term volatility and providing conviction for your trading decisions. Effective position sizing is another key component of successful trading. Finally, remember that trading and investing in volatile assets like cryptocurrencies involve inherent and substantial risks, and it is paramount to conduct your own thorough due diligence. Meticulously integrate robust risk management strategies into every single trade, and never, under any circumstances, trade or invest more capital than you can comfortably afford to lose, prioritizing capital preservation above all else for sustained success. Thank you for tuning in to Explain the Charts. We sincerely wish you successful, insightful, and ultimately profitable trading and investing endeavors in the dynamic and ever-evolving world of cryptocurrencies. We'll see you next time for more in-depth market breakdowns.